Let's bring in InvestorPlace.com executive editor Jeff Reeves. Jeff, we join you on a day where the market is selling off. What would you tell your clients in an environment like this?
Well, I think this is pretty much what we're going to see for the rest of the year. Maybe not a deep sell-off every day, but I think we're going to definitely see some volatility. I don't expect the market to be much higher or much lower by the end, but I think we're going to see a lot of fireworks. And it's mostly because, you know, there's so much uncertainty out there. You mentioned the Brexit, the Fed possibility of a rate increase. There's China. We just went through an earnings season, which frankly wasn't that great for a lot of companies. So I think it's very difficult for the market to kind of find its footing right now. So we're going to see, you know, swings higher, swings lower of 200 points, and we're pretty much going to finish, I think, around 2075 for the S&P for the end of the year. But like I said, I think there's going to be a lot of fireworks along the way.
So what do you like in this market, equity-wise?
Well, I think, you know, if you're a short-term trader, you want to try to catch some falling knives or make some swing trades, feel free. But what I'm advising people to do right now is go a little risk off and think for some of those low beta investments, particularly long-term dividend stocks. If the market's going to be flat, why not get a little income along the way? A stock that I particularly like right now is Ventus. It's a real estate investment trust, ticker symbol VTR, I believe.
Yep.
It owns senior housing facilities. It has medical real estate. So it pays a juicy dividend of more than 4% right now. It's not going to burn the house down with gigantic revenue growth or anything like that, but with a demographic shift of aging boomers, healthcare is a pretty safe bet. So I would hide out in stocks like that right now. There are some growth opportunities if you know where to look, but for a typical investor, I think going for a foundational play that's going to stick in your portfolio for years, not months, Ventus is a pretty good pick right now.
Interesting stuff. Charlie, we had a stat earlier, 52% of Americans own stocks. That's the lowest level in 19 years. What's your take on that?
And, you know, I remember when I first got to the Wall Street Journal back in 1995, the same week of the Netscape IPO, which touched off the big boom in internet stocks and the democratization of investing. Average people flocked to stocks, and you have just the opposite right now with, you know, following the financial crisis. You know, but, you know, that sort of behavior cost average people a lot of money.
Yeah.
I mean, if you think about it, if you started buying when everybody thought the end was near in March 2009, you did pretty damn good, you know, wherever it is now and however much it's off. So, you know, listen, I am not a big fan of Bernie Sanders. I think Hillary Clinton is much better than him. She'll appoint some smart people.
From the market point of view?
Yeah, I think barring a real lunatic in as president, and if you see Donald Trump, you know, moderate some of his stance, listen, I mean, long term, you know, this is the best bet in town, right?
Right. Let me bring back Sarge. Sarge, Jeff just said that he believes we're going to see a lot of this through the rest of the year, these big swings, these down 200-point days. Would you agree?
I certainly think you're going to see this maybe for the rest of the year, but certainly through the June Fed meeting. I mean, we just saw that the Fed funds rate futures are trading up around 14% for June, but more importantly, they're trading up around 50% for September. I think September is too late in relation to the election, but the guys who are trading the Fed fund futures don't think that. So, yeah, there will be a lot of uncertainty, but at least for the next 5 or 6 weeks, we're gonna have to keep our helmets on.
Let me bring in Alan Knuckman on that. Going to need your flak jacket and helmet tomorrow, Alan?
I don't think so. I think we're at the low end of the range. We'll look to see how this 2040 holds in the S&P. If you look in the big picture, we've been trading between 2040 and 2120 in the S&P for most of last year and a lot of this year within this wide range. Now we're at the low end of the range. But if you look at the VIX, we've been trading sideways now for 2 full months between 17 and 13. So we're still right in the middle. Can't make a decision, can't make a breakout. It is somewhat disappointing that the market wasn't able to stay above 2100 in the S&P. But I think Charlie was talking about the contrary opinion that usually the public is wrong. So a lot of people are out of the stock market, and that's usually the reality. People should be buying when they sell, and people should be selling when they buy. But it's just a psychological aspect of the market that's so important and so difficult for people to manage and to master because the fears, you know, get overwhelming.
Let me bring in Elliot very quickly on the oil side. Elliot, I find it hard to believe that this massive glut, we're swimming in it, you know, 80-year high of oil reserves has suddenly disappeared on us.
No, it clearly hasn't.
It hasn't. So when are we going to see oil prices come back down?
Well, you have to understand, people are looking towards the future, right? Crude oils are a futures thing, and people see that production is way off. Well, the rig count is down, and people are sort of counting on that to, you know, to drive the glut away and to drive the price up. and nobody wants to be sort of caught. I am not a believer of that again, but I agree really with what the other two guys just said. I mean, you know, if the average guy is sitting out the stock market, that probably makes it a buy. I can't agree with that more. As for oil, I mean, people are afraid of it. You have Goldman saying buy it, but you know what? On the lows, Goldman was saying sell it, and that didn't really work out for them too well. So, you know, you're sort of encouraging me to stay with my bearish feeling on crude, to really be honest.
That's okay. We'll let you.